And hope you're doing well today. It is Tuesday, the 21st of September, here for our quick market update. So let's go ahead and jump straight into it. Not a whole lot to review today. Could be kind of a holding pattern for us. We'll see. Today's Tuesday, the 21st, and we're always looking for any high impact news that might be coming out to help us plan our day. There's some medium impact stuff here, low impact with building permits, housing starts. These are actually, even though it's listed as a low impact, these are a good bellwether for the health of the overall economy. But the big stuff is really tomorrow. Tomorrow is the FOMC statement, federal funds rate, and then the press conference. And this is where the fuel could potentially come in to the fire. It's that catalyst, right? We talk about it all the time. The market's like a freight train. It's moving along, and it's just going to keep chugging in whatever direction it's going in because of inertia, right? It's just going to keep moving until something comes along, some force comes along that causes that train to have to change direction. It could force it to come to a stop and then be, it's like think of like a barrier in the road, right? The train has to slow down and stop, and then like a subway, it comes to the end of the line, and then it has to move back the other direction. Or something's in the road and it has to change tracks and it goes a different direction. I mean, there's a lot of things that can occur, right? Big high impact news events like this are one of those things that can be that catalyst for changing direction or catalyst to speed the train up. I don't know. And no one knows, right? No one knows. There's going to be all sorts of people talking today, talking tomorrow, what they think's going to happen, what might happen, what could happen. None of that shit matters. I'm sorry for cursing, but none of it matters. Everyone sounds like they know what the hell's going on, and no one knows. No one knows what it's going to do to the market. No one knows how the market's going to react, what's going to come out, and how the market's going to react to it. So again, we're not in the business here to apply our personal beliefs on to the market and hope something happens. Our job as a trader is to look at what's going on in the market and then take action based on that. And we have a quantifiable way of doing that using the BTX method, which month after month after month after month after month gives us that potentially profitable opportunity, right? So let's go ahead and jump into it sorry for going down that little rabbit hole. I know some people don't like that word, rabbit hole, but whatever, it is what it is. That little diatribe off to the sidebar, whatever you want to call it. So what's happening today? Well, what's happening today here is in the S&P, we've got a short 4-hour bias and we have a short 30-minute bias. That tells us we're going to look for short trading opportunities. In order to do that, we'd like to see the market push up. It needs to go higher, making higher highs and higher lows, higher highs and higher lows, so on and so forth. And then it should break back down in the direction of that current bias. When or if it does, then we would take action. If it just keeps moving up, we don't take action. And if it just starts moving down without us, we don't take action. We don't try to chase it, right? If it keeps moving up and it breaks above 4,400, by the way, and closes above 4,400, then that could be, a little directional change. At that point, more than likely our moving average would have crossed here anyway, and it would keep us out of the market. What we don't want to do is jump in, try to chase something, or jump in, with the hope that something might happen. We want to only trade when we've got a good, solid directional bias and we've got supporting reason for making that trade. So we're watching for, in this case, short trading opportunities prefaced by higher lows and higher highs, higher lows, higher highs, and then a break with momentum back in direction of that market trend. Over in crude, hey, where's my stuff on crude? I lost my stuff here. That's weird. Well, at any rate, we're in a long bias on crude. I don't know why the heck that has gone. It's so strange. Well, we're in a long bias on crude. Take my word for it. But what we're looking for is the market start pulling back for us. We'd like to see lower highs and lower lows, and then a break back in the direction of that current market trend with that nice solid move. What we saw yesterday was the market pulling back, pulling back, pulling back. Didn't really give us an opportunity on the BTX method to make that entry. So, you know, if anything, it would have been over here, which was prior to my my market session. So something odd going on here with my my indicator on crude. I'll have to look into that a little further. But crude is a long bias, and we're looking for markets to pull back and then snap back in the direction of that current market trend. And then here on gold, gold is a mixed bias for us. If you can look way up here, we've got our 4 hour is short. We can see it's significantly short on the 4 hour. 30-minute is long, and so that gives us a conflicting bias on here. So with gold, we have a conflicting bias, and we're not looking to do anything at all. We need to just sit on our hands until we get a snap back into some sort of a definitive direction on gold. All right. So that's all I got for you for today. Gold, by the way, yesterday, higher low, higher high, higher low, higher high. It moved up, but didn't break with any momentum. So we can see we had our signals here telling us, hey, watch this bar. It closed higher, made a higher low and a higher high, made a higher low and a higher high. It's saying, watch the bar, watch the bar. But then on that next candle, it didn't break it with momentum. So we weren't into that trade. So we're sitting on the sidelines with gold. All right. So anyway, that is it for me. I'm going to leave it here. You know, today coming into FOMC tomorrow could be an interesting day for us. It could be. It's all right, son. It could be a kind of a holding pattern until we get to that FOMC tomorrow. So we'll leave it here. You guys have a